Hello and welcome. I'm Sarah, and today I want to ask you an important question. When you look at your Social Security SSI or SSDI payment this January, do you truly understand what changed, why it changed, and what it really means for your everyday life? For millions of seniors, retirees, and people with disabilities across the United States, January payments are more than just numbers on a bank statement. They represent stability, peace of mind, and the ability to manage daily needs with confidence. That is why today's update matters so much. There has been a lot of talk, a lot of headlines, and a lot of confusion. You may have heard big percentage increases mentioned. You may have seen social media posts promising extra money or sudden relief. But what really matters is how much money actually reaches your bank account, how dependable that income is, and how you can plan wisely in the weeks and months ahead. Today, we are going to slow things down, clear the confusion, and walk through what is really happening in a calm and easy-to-follow way. January is always a very important month for anyone receiving Social Security retirement benefits, supplemental security income, or Social Security disability insurance. This is usually the month when annual benefit increases begin. It is also the time when payment schedules can shift, Medicare deductions may change, and other adjustments take effect. For many seniors, January is the first time they feel the impact of new cost of living adjustments and policy updates. That is why so many people check their bank accounts more closely this time of year and wonder why their payment looks different than it did in December. Let's talk first about benefit increases, because this is where much of the confusion begins. When people hear about a large percentage increase, it can sound like a major financial change. A number like 9% sounds big, and it naturally raises expectations. But the truth is, a percentage increase does not affect everyone the same way. The actual dollar amount added to your check depends entirely on your current benefit level. If you receive a smaller monthly benefit, your increase in dollars will also be smaller, even if the percentage sounds impressive. On the other hand, if you receive a higher benefit based on your lifetime earnings, your dollar increase will be larger. This is why two people can both receive the same percentage increase, yet see very different new payment amounts. It is not about fairness or favoritism. It is simply how percentages work when applied to different base amounts. For Social Security retirement beneficiaries, the increase is added directly to your base benefit. That means your new monthly payment becomes your standard amount going forward, not just for January, but for the rest of the year unless another change applies. For SSDI recipients, the increase usually works in a similar way, with the adjustment added to your regular monthly payment. Over time, these increases can help protect your income against inflation, but they are not designed to fully offset every rising cost. For SSI recipients, things can feel more complicated. SSI is a needs-based program, which means your payment can be affected by income, living arrangements, and other forms of support. Even when there is an overall increase, some people may not see the full amount if other factors reduce eligibility. Housing assistance, family support, or state supplements can all influence the final amount deposited each month. This can be frustrating, especially when you hear about increases but do not feel them fully in your own budget. Another important point to understand is that a benefit increase does not always mean you will feel more financially comfortable. Many seniors are facing higher costs at the same time. Food prices, rent, utilities, insurance, and medical expenses have all been rising. So even when your check goes up, your expenses may rise just as quickly. That is why it is so important to look at the full picture, not just the increase itself. Careful budgeting and thoughtful planning matter more than ever when you are living on a fixed income. Now, let's address the topic that many people continue to ask about: stimulus payments. As of now, there is no confirmed nationwide federal stimulus program like the payments issued during the pandemic. While rumors continue to circulate online, there is no official program guaranteeing new stimulus checks for everyone. Some states or local governments may offer targeted assistance, rebates, or tax credits for seniors or low-income residents, but these programs are not automatic and usually depend on eligibility requirements. It is very important not to rely on rumors or social media claims about guaranteed stimulus money. Be especially cautious of anyone promising fast cash in exchange for personal or banking information. Government agencies do not contact people this way, and they do not demand sensitive information through phone calls, texts, or emails. Protecting your personal information is essential, especially during times when benefit news is circulating widely. For most seniors, the most reliable income continues to come from Social Security, SSI, and SSDI. These programs form the foundation of financial security for millions of Americans. That is why understanding how they change each year is far more valuable than chasing uncertain or misleading stimulus claims. Small, steady increases that you can depend on often provide more long-term stability than one-time payments that do not address ongoing expenses. Medicare is another key factor that affects how much money you actually keep from your Social Security payment. Many people forget that Medicare Part B premiums are typically deducted directly from Social Security checks. If Medicare costs increase, that deduction can reduce the net benefit increase you see in your bank account. On the other hand, if premiums remain stable or decrease, you may feel more of the benefit increase. This is often why people feel disappointed when their payment does not rise as much as they expected. Timing is also important when it comes to January payments. Social Security does not pay everyone on the same day. Payment dates depend on your birth date and the type of benefit you receive. SSI is usually paid at the beginning of the month, while Social Security retirement and SSDI benefits are paid on different Wednesdays depending on your birth date. This means some people receive their increased payment earlier, while others may have to wait longer. Knowing your payment schedule can help reduce anxiety and prevent unnecessary worry. During this time of year, scams become more common. Whenever benefit increases or stimulus rumors make headlines, scammers take advantage of confusion and concern. They may contact you claiming you need to verify information to receive higher payments. Remember, legitimate government agencies do not pressure you, threaten you, or demand personal details in this way. If something feels rushed or frightening, that is a warning sign. Protecting your identity is just as important as protecting your income. Now let's talk about practical steps seniors can take to make the most of their benefits during times of rising costs. One of the most important steps is reviewing your monthly expenses carefully. Knowing where your money goes can help you identify small savings that add up over time. Even modest adjustments in spending can make a difference when your income is fixed. It is also helpful to explore community programs that offer support with food, utilities, transportation, or medical services. Many seniors qualify for assistance they are not using simply because they are not aware of it. These programs may not increase your monthly check, but they can reduce expenses, which has the same effect as having more money available. Keeping your information up to date with Social Security is another important step. Changes in address, banking information, or marital status can affect payments and communication. Accurate records help prevent delays, errors, and misunderstandings. Taking care of these details may not feel urgent, but they play a big role in maintaining stable benefits. For seniors who are still working part-time, income limits are another important consideration. If you are below full retirement age, earning too much can temporarily reduce Social Security payments. Understanding these rules can help you plan your work hours wisely and avoid surprises. Staying active and earning extra income can be rewarding, but it is important to balance that with how benefits are calculated. As we move through January and into the rest of the year, staying informed and realistic is essential. Benefit increases are helpful, but they are not a complete solution to financial pressure. Careful planning, safe decision making, and reliable information are your strongest tools. You deserve stability and peace of mind after a lifetime of work and contribution. It is also important to remember that not everyone experiences benefit changes the same way. Someone with higher lifetime earnings will naturally see a larger dollar increase than someone with a smaller benefit. SSI recipients may see changes influenced by living arrangements or other support. These differences mean that budgeting strategies need to be personal and realistic. Taxes are another topic that can surprise some Social Security recipients. Depending on your total income, a portion of your benefits may be taxable. This does not apply to everyone, but it is something to keep in mind if you have other income sources. Planning ahead can help prevent stress later when tax season arrives. Healthcare costs continue to be a major concern. Medicare provides essential coverage, but it does not cover everything. Copays, deductibles, and prescription costs can still add pressure to your budget. Reviewing your health coverage each year and understanding your options can help your benefits go further. Many seniors worry about the future of Social Security and Medicare. While discussions about long-term funding appear in the news, benefits for current recipients are not suddenly disappearing. These programs remain a priority because millions depend on them. Staying informed helps you prepare rather than worry unnecessarily. Support does not always come in the form of cash. Help with energy bills, food assistance, transportation, and medical costs can reduce expenses and improve financial stability. Learning about local and state programs can provide meaningful relief. Family support is another important consideration. Helping loved ones can be emotionally rewarding, but it is important to protect your own financial stability. Setting boundaries is not selfish. Your income must support your basic needs first. Debt can also consume benefit increases quickly. Paying down high-interest debt, even slowly, can improve your financial situation over time and reduce stress. If your January payment seems incorrect, do not panic, but do not ignore it either. Keep records, know your expected amount, and act promptly if something seems wrong. Early action can prevent bigger problems later. Having trusted family members who understand your financial situation can make challenges easier to manage. You do not have to carry financial stress alone. As we close today's update, remember this: January payments often bring changes. Increases can help, but they must be understood clearly. Rising costs make careful budgeting essential. Scams increase when benefit news spreads, so protecting your information is critical. And many support programs exist that can reduce expenses, even if they do not increase your check. Staying informed, planning carefully, and seeking help when needed are powerful steps toward protecting your financial well-being. Your future matters. Your stability matters. And even small actions today can make a meaningful difference over time. Thank you for spending this time with me. Take care of yourself, and remember, you have earned the dignity and security these benefits are meant to provide.